before we get started, I just want to make a reminder to everybody that the information discussed today is not to be interpreted or construed as investment advice. Everyone's financial situation, goals, and objectives are different. Please consult investment advice. Welcome back to the Loonie Hour, episode 11. As always, we're accompanied by, in Portugal, Portugal's finest, Rich Diaz of Acorn Macro Research, the Tom Brady of macro. Welcome back, Rich. And of course, we've got the Turkey man, Papa Keith of IceCap Asset Management. Welcome back to the show, gentlemen.
Hey guys.
We've
I
got
love Rich. I love how today that's Steve and I were wearing the traditional Santa Claus hats, and Rich decides to go with the jester hat.
I think it's an elf's hat, but Merry Christmas to you, Keith and Steve.
That's what they want.
Tom Brady of macro makes me a little nervous. He's
got into his 15th Pro Bowl apparently.
Yeah, that's pretty good. I don't know if I'm Tom Brady macro, but appreciate the compliment. Happy holidays, everybody. Merry Christmas. Hope you're enjoying the lockdowns.
Enjoy. Let's I think we got to jump into that because this is the last show before the holidays, and obviously trying to stay apolitical, but obviously we can't help but talk about the lockdowns in Canada, because I know Keith was talking about it last show. We've talked about it numerous times. It's not necessarily what you want to happen or what you think government should do. It's how will they react when you have rising case counts. And it was very predictable that Canada's back into rolling lockdowns pretty much across the country. Here in BC, a couple of days ago, they just announced closure of bars. Gyms are now closed until mid-January. 50% capacity for all sporting events. Indoor gatherings are maxed out to 10 people, and you can't. I don't know. It's confusing. But I have a question for you, which I think I'll sort of steer towards Rich, because I think we want to get an angle now of, okay, this is kind of happening in Canada. How is this going to impact, economic growth here moving forward? This is a huge setback. Of course, we've got the money printers turned back on. We had Trudeau coming out and saying, don't worry, the funds are coming. Jagmeet Singh of the NDP saying, oh my gosh, you guys, you got to get the stimulus out the door. So this is all going to impact the macro landscape. Rich, first and foremost, kind of curious to hear your thoughts, because we actually just had a release, Canada's GDP today. I don't even know what it came in at, but does it even matter?
3.8 year on year.
Yeah. So, I don't know if you have an opinion here moving forward, what your outlook is, because obviously this is going to impact, potentially, future moves from the Bank of Canada.
So I think there's three things there. One is, do stoppages hurt growth? It's impossible to say otherwise. Two, on the near term stuff, is month to month, quarter to quarter, are we going to have a significant drawdown sort of in our economic activity? I think for some sectors, 100% sure. Keep in mind that not every sector is, impacted equally, but I think in aggregate, for the real estate industry, we'll probably have another massive leg up. Steve, you're going to let us know later. I'm just kidding. But, the way Canada sort of sets it out is, there's goods producing and service producing industries. So just to give you a rundown for people who may or may not know, a good producing industry is agriculture, mining, construction, manufacturing, etc. And then there's service producing industries. So there's what are service producing industries? There's, I'm just reading the list here so I don't miss anything, but healthcare, arts, management of companies, real estate, finance, insurance, retail trade. And I think that there's two ways to look at it. One is to say, obviously lockdowns are bad. And obviously lockdowns are bad for growth, but I think there's some industries that fundamentally just won't be affected by it. So construction, frankly, there's probably a lot of holidays for lots of construction workers right now. And I think in a weird way, if you were ever going to lock down an economy, doing it over a Christmas holiday and the New Year might actually be one of the more benign times to lock down an economy. So, that's on the sort of the positive end of that. But then on the other side of it, in some service industries, like obviously like restaurants, the arts, retail trade. I mean, some companies have their they sell a quarter of all their revenue is sold in the run up to and including Christmas. So to suggest that these people who are, people are told to stay home, not go out, not spend on restaurants and stuff like that. I mean, those industries, which employ, by the way, a huge amount of people and obviously are on the lower end of the income scale, are going to get absolutely caved in. If you're, if you're a white collar worker, you've probably been working from home for a long, long time, and you're probably not really affected by this. If you're a blue collar worker, you're going to get absolutely hosed. This was a real opportunity to sort of recoup some of the income that you may or may not have lost. And then the final thing is, I'm not sure that, government handouts can perpetuate in perpetuity, but ultimately it affects things like, productivity. Obviously, and the other thing is there's, you have, what would you call it? You have, the multiplication factor, help me out here, boys. For every dollar of spending, you have
money multiplier.
Money multiplier. Sorry. So the first bunch of times that they had first bunch of handouts, it was probably very effective. It was a stopgap. At this stage, it's not clear that you have that, that marginal dollar of extra government handout. It's not clear that will help anywhere near as much. That's sort of my rundown on it. Keith, I don't know if you have anything to add on that.
I mean, so growth is going to get weaker on a relative basis. Of course, it has to, because it was so bad in 20, in the first part of 21. What's going to happen now, though, at the Bank of Canada, they know where, that fiscal policy, monetary policy has been a main contributor, to this sort of rebound we're having. And it is, as you mentioned, the multiplier, Rich, it is starting to weaken. So it is coming off a bit. So what I suspect the Bank of Canada will do, they'll continue to sound hawkish because of the inflation side, but the actual actions that they'll take, I think it's going to come right in line with what, we've been chatting about now for a few months now, maybe. In that, you might see 1, 2, 3 hikes by the Bank of Canada, and that's it. And then they get stopped out. But, we're going back to another weak state. And because Steve, as you were talking about last week, they're on the fiscal side, the government, they want to ramp up more spending again. And as you also discovered, or we've discovered that, nobody knows where the money is coming from on the budget. Again, it's just such a... It's just such a poor state of the world that we have right now, in that on the public side, there's no fiscal responsibility anymore. People think money is free. They can just do whatever they want with it. But it's one thing to believe that, hey, rates are low, let's borrow and do what we want because rates are low, we can do this. But it's a whole nother game or conversation when you start hearing the public sector, like they're not even aware of where the money comes from. I don't know, maybe we put in a policy that whenever they want to increase spending, they got to knock off, say, $100 from their salaries. Like, let them feel the pinch of doing something, because they have no skin in the game. Like you and I, 3 of us, we run a business, we have skin in the game here, whereas the policymakers don't. What were you thinking there, Steve?
Oh, I got a great little story for you. Because remember, we were talking about, I think I was in the show last week, but that I was invited on to the finance committee at the House of Commons. Of course, they were talking about, I think it was Bill C2, which they brought me on because they were trying to pass a $7 billion COVID relief stimulus, like an additional $7 billion. And of course, I just went on there and said, well, just be careful because, some of the excesses are showing up in our housing market, for example. Funny enough, that bill actually was passed last week. And I think it was passed at like 4:30 p.m. And then an hour later, as all of the MPs are getting back on their airplanes to go home for the Christmas holidays, Krista Freeland came out and said, oh, by the way, we made an error. It's actually not 7 billion, it's 12 billion. So Merry Christmas and Happy New Year. So again, it kind of gets back to your point, right? It's like, well, that's a 60% increase. I mean, I guess a rounding error perhaps, but just kind of goes to show you, right? There doesn't seem to be a whole lot of prudence. And
it's not just prudence. Oh, sorry.
I mean, I don't know. I kind of made the joke on Twitter that everyone keeps talking about housing market, and you can see like all the regulators and the policymakers are like, they're so like out of options. They're just like, we've tried everything, foreign buyers tax, empty homes tax, like nothing's working. And now everyone like OSFI even is coming out and saying, we need to build more homes. OSFI, of course, is the Canadian banking regulator. And I said, well, like, does it even matter? Like, building more homes is a drop in the bucket if you're not accounting for monetary imprudence, which is the fact that, Rich, correct me if I'm wrong, but the data that I'm looking at is since the start of the pandemic, Canada's M2 money supply has grown by 23%. I mean,
yeah, that sounds about right. I can't remember the exact number. I'll have to look it up, but it sounds about right. It's enormous. I mean,
so you build an extra 10,000 homes.
Yeah,
what difference does it make? It's just like, but that's what it is, right? Nobody wants to face the hard truth, which is, so let's just, all they can say now is like, let's just build more homes and hope it figures itself out.
If I can wrap both of your views together into a little bow and put it under the tree with a card from yours truly, I might say that the issue is there's no discussion of the trade-offs that we face, and whether it's the 7 billion or 12 billion from one end, or the or the monetary policy that will basically never, ever be adequate for the deficits and inflation that we're dealing with. No one wants to have a discussion about trade-offs. And the reason I bring that up is because we're dealing with those trade-offs now with respect to the new COVID lockdown. And again, if you're white, you're a relatively wealthy, middle-class person, and you've been cowed into an incredible amount of fear. When, by the way, I don't know if you've been paying attention to South Africa, the hospitalizations are down and they're about a month ahead, and on it goes. There's no discussion of the trade-offs, and that's what it is to run a business. That's what it is to be an adult. That's what it is to make tough decisions in our world, as to what it is to raise children. I don't have children, but Papa Keith will tell us about that. I mean, you're constantly in a situation where you're making trade-offs. And I think that what we in Canada are being constantly faced with is a situation in a world of policymaking and governance where there are never any trade-offs. And everything that they do has no negative externality, and there's no negative consequence. And I think for Canadian investors, I mean, I've said it, a month ago, and I'm going to keep beating the drum. I know this is not, I continue to be positive, because until people recognize that there are trade-offs, I think risk assets is where all this extra cash goes. And for you, Steve, I know you've mentioned the same thing about real estate. They just refuse to address, you can build 10,000 homes in a country, by the way, with 37 million people. It's not you're not addressing the real root of the cause. And so I don't know if you're super positive or negative on housing, you'll let us know, but.
I'm going to mention
Go
something
for
here
it
quickly. I can't say any names. I'm not going to mention who it was, where it came from, but I recently went for dinner with someone very high up in one of the banks, and it kind of confirmed one of my suspicions, which is that house prices continue to go up. So by all accounts, wages obviously have not kept up over let's just call it the last 18 months. So house prices are up nationally like 30% since the pandemic. Wages have not really gone up. Residential mortgage credit growth, though, is somehow running at 10-year highs. What happened to the mortgage stress test? It wasn't like, what's going on? Where's the mortgage stress test? I mean, how are all these people qualifying? And again, policy responses, but what this individual told me was that at their institution, over, I don't want to say the number, but over 60% of their files get pushed through for variance. So if you're applying for a mortgage, most of them don't pass, quote unquote, the traditional stress test, but they push it up for a variance. And I said, well, doesn't the OSFI tap you on the shoulder and say, hey, hold on a minute, guys? He goes, no. All of our programs have to get approved by OSFI. So OSFI is basically in one in one corner, they're saying on to the traditional media, hey, we got the stress test. It's supposed to buffer the housing market. Yay. Like we're practicing all this prudence. And then behind the curtain, it's like, hey guys, get it out the door. And it's just what it is, right? And that's what I'm saying. Now the OSFI guys are coming out on the media and the news and saying, hey, yeah, there's more investors in the market, but we just got to build more housing. Like everyone's just kind of given up. So
I think they've given up. I think they're just continue to go with it. And it's like, as I said before,
it's too big now, right? It's just too big. Like this,
absolutely.
You can't unwind this thing.
So now think about it now. Now we have really the four-headed monster going here. You know, the Bank of Canada, they said, yeah, okay, lads, go nuts, buy housing. We're not going to stop it. The Feds have said the same thing. You know, yeah, we'll keep, creating deficits and programs on programs. So keep buying, it's going to go. The banks will keep on lending. And then the regulator says, yeah, don't worry, like just keep lending. So again, we keep going back to like, this will stop at some point soon, as they say, like the music will stop eventually. But it will be one of these external events to Canada, that will trigger it. And, that could happen very soon, maybe next year, next quarter, or I suspect, we're looking at maybe a year to 2 years. I mean, that's it. Because we're all on borrowed financing time right now. All it's going to take is one tick higher in other credit spreads or nominal rates on the long end of the curve to do something bad here. But that's Canada, guys. That's where we are. And it just keeps going around and round and round. And it's only the guy with the Santa Claus hat and the jester hat that are talking about it.
Yeah, those are the only serious characters in Canada. They're asking the hard questions. Hey, Rich, I got a question for you. I'm not going to pretend to be an epidemiologist.
Uh-oh.
I don't know if I said that right, but what's the COVID case counts like? So I always, we were talking about this off air, but like the US has got, Omicron surge, the UK, which Rich, you were just there, Europe, Australia, like none of them are shutting down, but just Canada. I mean, like we're the smartest country in the world, or like, do we have a bunch of politicians that are just afraid? I don't know, just.
I'm reminded of the quote, the only thing to fear is fear itself. And I think that, I'm a cynical guy. And I think that people are basically at this point, they're making their careers off this. And I think that there's two things, just to be clear, one can be critical of the government policy and not discount the genuine dangers of coronavirus. And I think the problem is anybody who tries to strike a balance between, vaccinations are important, we need to fund hospitals, we need to do all these like sensible things. And the other side being, oh, maybe lockdowns don't make any sense. You're perceived as someone who like doesn't care, doesn't believe the science and all that stuff. And I think there's a lack of balance in this conversation. I think it's happening all over the place, whether it's monetary policy or government policy or Corona. And I think that, and your point, Steve, is really, really important. So like, I track this, and I've shared it on Twitter many, many times, and I can share it with the viewers today, which is Corona COVID case count. So we're at 11,000, which by the way is an all-time high. And the daily deaths, by the way, are at a 7-month low. And this is with a fully vaccinated population of 77. There's three things. Number one, cases are a terrible KPI. And why? Because the testing has massively increased. And I don't want to get into this whole Corona debate. I think just what's important is the lack of balance and the lack of honest discussion about maybe there's alternative ways to deal with such an issue. And the idea that if anyone disagrees, they're perceived as some kind of Trumpian, ne'er-do-weller. And in the cases, by the way, which is something that no one's discussed, continue to drop. And that's why, because the vaccine works, right? And so like people are getting their boosters. And so it's really kind of a shame that despite all of this, there's been no discussion with respect to, hey, what are the negative effects of the lockdown, given what we know about the deaths and the hospitalizations and the case count stuff. So I know I'm not a virologist or an epidemiologist, not a doctor, but I do know I'm good at understanding the human condition. And there's a behavioral finance element about this. There's loads of people who are committed, who spend a lot of political capital driving the bus in a certain direction. And for them, it seems impossible for them to turn around and go, you know what, maybe we overreacted. I mean, I've yet to hear a politician in Canada suggest that.
I mean, how I don't know how much of that is just the Canadian media being captured. Like, is anyone willing to veer and ask? I don't know. I mean, Keith, I don't know if you have any comments on that, but.
Yeah, I mean, a lot. I mean, so first of all, with COVID, people are getting sick. I mean, that's absolutely happening. However, what's being missed right now? We're 2 years into this, and you're not allowed to have the proper conversation about it. A lot of the media, so that they are left leaning, and they've already taken this specific slant with it. However, we have to understand and appreciate it, as Rich pointed out, and it's very easy to find this. That deaths are not increasing. The death count is low, and that sounds cold sometimes, but cases are not leading deaths. People are recovering whether you're vaccinated or not, and it doesn't matter if you believe in the vaccines, you're a non-vaxxer or whatever they call someone in that group. We need to have the conversation now that everything we've been doing, it's not working. So, for example, here in Nova Scotia right now, the case count has gone up. And one of the reasons it's gone up is because people love getting tested. People are lined up around the corner, people with no symptoms, no one's feeling sick, and they feel like it's their duty. So they're really buying, and that's the Canadian culture. You support the state and all that. However, more people get tested, more positive cases you'll get, and so forth. But what's happening here, guys? It's because people, are testing positive. Now it's creating this environment. Well, if you bumped into that person over there, then you're in close contact. But then you met your friend and they're in contact with you. And obviously, like the whole city becomes a standstill. So I know people now, Christmas coming up tomorrow. Is it more the next day? Because they've been in contact with someone who tested positive. They're now self-quarantined, I think, for 4 days. They're going to be in their house. Like, that's their choice. That's what they're doing. They claim they're following the rules and all that stuff. But it's really disrupting not only the economy, but just how we do things, as humans and in our lifestyle. And if you go to the US, it's like a split down the middle. You have one side, they're masked up all the time, even outdoors, walking down the streets, whereas you go to other parts of the country and they're not. So a friend of mine was just down in the Carolinas, and he couldn't believe it. People are out doing stuff. They're not wearing a mask at the restaurants. And he was telling me the stories about, these guys are crazy. And I don't say, well, I think you're a little crazy too, because you're pretty strong on the other view. But that's my point, though. You're not allowed to have that conversation. But I love watching football, for example. And every weekend, you see the college football in the US. There's hundreds of thousands of people getting together watching this stuff. NFL football, the exact same stuff. And I'm expecting any day to see this COVID alert coming out is saying, everyone that went to that, Green Bay Packers game, they all got sick or something. And that's not happening. So my point is that the policymakers need to rethink what they're doing, because it just isn't working. And the fact that I bring this up now in a podcast and you guys with something, we're considered to be, you're not supposed to talk about this or you're in trouble. But I think it's only Canadians like that. I think so. Rich, when you were in London, was it a big conversation with COVID or not? Or did people just not care too much?
I think people do care. I think people really do respect the science in London. I think it was one of the highest vaccination rates in the world. They take real pride in the fact that AstraZeneca was invented in Oxford, and it was a British-led contingent that really pioneered the vaccine. But I think there's a much more healthy acceptance of A, risk, B, reality, and C, that this is not good for humans. It's this idea that you have a constant set of paranoia, that you're told that the other is evil or damaged or negative. And there's a certain kind of, so that's that bit. In England, I mean, everyone's masked on the tube, but people were on the tube. And, and it wasn't the government necessarily that took it upon itself to lock everything down, but people, maybe adjusted their plans. But at the same time, people were outside having pints in the street because you're outside. There's wind, there's air. Do you know what I mean? I'm laughing because the idea that governments continue, this idea that there's no scarring, I think that this is something that Canadians really need to recognize. And I think not enough of it they're not having enough of a conversation about it, which is there's like an emotional, sociological, and political scarring as a function of all this behavior. And instead of saying, hey, wait a second, maybe the fear that we're inculcating in our population will have some long-term negative impact. And I'm double, I'm all about getting vaccinated. I'm happy with my mask when I'm told to, but the idea that you just shut down absolutely everything, let in mind, the cases are falling, hospitalizations are falling. And I find there's no sense that and again, I think that there's also the other thing we don't talk about anywhere near enough is it's the white collar, blue collar thing. If you're a white collar worker and you can work from home and your stock's up and your houses are up, and of course you're happy to jump on the fear bandwagon. But if you're, if you're a personal trainer and you get paid by the hour, and you have no say, you have no agency. And people say, well, you're going to get served. Most people who I've met in my life don't want government handout. There's no sense of pride there. And I think that there's it's a schism that I think will last for a long time. And I feel at a loss sometimes.
One of my, sorry, go ahead.
First, yeah, but I think you just said something really interesting, Rich. I think that we'll carry into next. You mentioned that people don't want to rely upon government, to do this or that. We were chatting earlier. I think there's a percentage now of the Western world anyway. They are moving towards that. People who either got left behind in the housing market, the younger, or they finish university or training and they have tens of thousands of dollars in debt and they can't make enough money to make a go at it. So my concern is that, we are sort of having this, oh boy, oh yeah, Steve was going to go into that, right? Is that your?
I just was thinking of a joke, but you finish.
Oh, okay. Is it a jester joke?
No, it's okay. I'll just tell it now. So I think I might butcher this, but it's like if you're young and you're not a socialist, you don't have a heart. If you're old and you're a socialist, you don't have a brain.
Yeah, Winston Churchill, right?
Yeah, is that Winston Churchill? I don't know.
Someone's going to come tell us that it wasn't Winston Churchill, but I think a quote.
So I was named after, I have two middle names, by the way. So yeah, cool. And, maybe for security identification, I won't push them out, but they're two very popular British names over the years and centuries. So, yeah, I got a big, long royalty name, and that's in there. And my dad has one of the names as well. Of course, one is Winston, of course, right? Winston Churchill, that carried on to it.
Winston Boris.
Yeah, that's right. Francois or something. But the other thing that we'll sort of leave out here with COVID, again, if you're in the data world and you're in the world of science, we now have 2 years of unbelievable data coming out. Like every day, every week, every month, there's so much information out there. And of course, a lot of it will get, put together and spun and spinned around to tell whatever story you're told to tell. Because a lot of people don't realize that, which reminds me of something else as well we got to jump into. But I keep going back to the US. I think it's a perfect place or market to study this, because specifically down in Florida and the Southeast states and Texas, a large part of the population, they're out doing everything as they've done before. And lots of vaccinations, all that stuff taking place, but they're not taking nearly the same precautions as what's happening in other parts of America. But yet, and maybe you know the data, Rich, how it looks, but it's my understanding the numbers are no worse or no better than the States, that completely clamped down on things. And I think that's what should drive the conversation. Again, like, I just don't think what's been happening has been the right way to do it. And now we have data to show that, yeah, you know what, you're right. The Swedes were right, or the Swedes were wrong, or, you sort of go down that route with it.
I think that brings us into the larger like macro piece, because just kind of touching on what you guys just chatted about, and obviously we don't beat a dead horse here about the virus, but I think there's some frustrations. In fact, like you guys talked about personal training. Like one of my best friends, high school friend, ex-roommate, he is a personal trainer, right? So he just got shut down, like zero income coming in now. So he looks at that and says, well, I can't do personal training sessions one-on-one even with people, but you're still technically allowed to have half capacity. So 9,000 fans at the Vancouver Canucks hockey game. I mean, how much sense? So, but I think that there's like this kind of this frustration brewing. You look at the US, and I think that kind of brings us to the larger macro piece, which is the fourth turning. And if anyone's not familiar about it, there's a book called The Fourth Turning. It's written by Neil Howe. He's a demographer. He's now with like Hedgeye on their research team. But it's a very popular book, particularly in the finance space. And basically what it argues, or his premise is, he went back and studied all these societies over many, many, centuries. And kind of what he determined was that society tends to go through sort of these seasons. And these seasons can last 20, 30, 40 years. But what he argues is that we're now going into, the developed world is going into what he calls like the fourth turning, which is essentially where things get really bad. People lose faith and trust in your institutions, right? So what he argues is basically rip down the existing institutions. There's this friction and this divide in society, and they rip down the sort of the status quo. And then what happens is you ultimately, from that sort of rip down, you basically get a rebirth, which is like new institutions, new society, and you kind of come out of it better on the other end. But it's a very sort of dark and painful place that you have to go through in order to kind of rebirth on the other side. So he argues that we're in the fourth turning. And I think if you look at certainly what's happening, I feel like it was happening before the pandemic, but this pandemic has been this spark where you've seen this huge divide between, the right and the left, and the mistrust of, the mainstream media. And you've got big tech telling you what is, they're determining now what is fake news and what isn't fake news. They're, and we've seen this a lot of the COVID stuff, like stuff that they were initially taking down and saying, well, this is fake news. 5 months later, we're finding out, oh, it was actually true. And so to me, it feels like from a larger macro perspective, I think you can clearly see, maybe less so in Canada, but I think you are seeing the failing and the loss of trust in our institutions. I don't know, Keith, if you have any thoughts.
Yeah, I agree with that. I think with Canada, though, I think we're dead last. We're at the end of the lineup here, in that I don't think there is a bit of a distrust or lack of confidence in our policymakers. But I tell you what, buddy boy, the majority of Canadians are in line. That's what we do. No questions asked. And so what's good about that is that, you're living your day-to-day life now, and you're probably not experiencing any stress or animosity about things in general. You're being told, buy your house, pay off your debt, which you can't do both, of course. Things like that. Whereas elsewhere around the world, it really is happening, Steve. I see it. And then, of course, I overlay on top of that. And again, we are at this incredible moment in time, a turning point with long-term interest rates. They are absolutely going to surge higher. People say, well, that hasn't happened yet, or it might take another 2 or 3 or 5 years. The long scheme of things, like if it happens within a 10-year period from, say, like 5 years ago to 5 years from now, when this goes up, it really does end all these systems that we've been relying on before. And that's where we will get a pretty dramatic change in how things are done. So, again, Canadians, we're going to, I think we're going to be shocked when it happens, whereas other parts of the world, maybe they won't be as shocked because maybe they're driving it. But I don't think here in Canada we're driving that push. What do you see, Rich, or do you see the same thing?
I think that there's two things there. I think the West is a victim of its own success. And if you don't mind, I'm going to quote one of people who is one of my personal heroes and just a brilliant writer. His name is Janan Ganesh, and he writes an opinion piece for the FT, the Financial Times in the UK. And he wrote a note, basically sort of an obituary to Bob Dole, and he wrote, to regard anything in public life as inevitable is to succumb to theology. Still, with the passing of Bob Dole and much of his generation, it is hard to avoid the thought that societies grow rasher and more reckless as the memories of the past crisis fade. And basically, I think that's how I feel it. So for me, I would push back on that turning thing, because I think my friend laid it out quite well in the sense that, to suggest that these cycles are inevitable, I think is borderlines on theology. And I always push back on anything related to providence and theology. But one thing I do really share with respect to both your guys' points is the complacency, that I think we share in Canada, and ultimately being the victims of our own success, whether it's the woke stuff or whether it's, this complacency or that complacency. I think people are, life is almost too good, right? There's nothing to complain about. And I think what that breeds is a certain two things. One, you start to forget that if you don't really pay attention to your institutions, if you don't really push back against government overreach, that you inevitably fall into these traps which we have seen those cycles. And that's where I'm very sympathetic to the fourth turning thing. And then as far as the complacency, I think it's incredible, whether it's legal, whether it's political. I mean, the idea that Canada couldn't fall into a more authoritarian trap, I think it's a classic example. Not here. It's never going to happen here. It's never going to happen here. And we've seen it. And to share it back to you, Steve, we've seen it before, right? If you understand the history of sort of the longest century, which is if you ever want to read a really, really good book, his name is Eric Hobsbawm, and he wrote Age of Empire, and he called the longest century was the 19th century, so 1800, and it ended in World War I, 1914. And it'll tell you that, that schism, World War I, was seen to be impossible, right? At the time when it kicked off. No one would believe that could happen, right? You just had an 18th century that was bloody. You had a 19th century that was bloody and miserable. And by 1910, people had thought, total war had been a thing of the past. And I bring that up because I think that it's just, people believe that interest rates can never go up. Right? That's that complacency. We figured out finance. We've figured out this volatility. We've figured out this growth. And I think that again and again, history teaches us that when you don't pay attention to those little details and you don't work hard to keep those institutions either independent or, hold politicians accountable, or when you mess with markets consistently for prolonged, sustained time, you eventually you get those schisms. And so that's why I think the three of us sort of, even though we come at it from different angles, I think we all sort of share where that might end up.
I think that's a good point, because one of the questions I kind of have, maybe for Keith here, but is people are going to get confused. So they're going to go, okay, we're listening to this show, and hold on a minute, you're saying interest rates can go up. They're going to go up. Keith's saying, hey, this thing's going to blow, rates go up. They're like, well, hold on. Didn't you just say Bank of Canada wasn't going to raise rates? Didn't you say we're in this perpetual debt trap? Blah, 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 blah. There's going to be some confusion. Correct me if I'm wrong, but I think we probably share a similar view, which is that they're going to try to sort of keep the ball pressed underneath the water. Maybe that's manipulation of more QE and yield curve controls. They're pushing this ball or holding it under the water. And eventually it's going to pop up. And given the debt loads, across the world, do you see that playing out as like, that's like your great reset, that everybody keeps talking about? Like, are we kind of at the end of this Keynesian, as Ray Dalio calls it, the long-term debt super cycle, where like you have tried everything and you kind of have, like, in my opinion, like what's happening in asset markets looks to me almost like a symptom of just like a fiat currency that is essentially failing. Like it's just being debased at an unprecedented pace. U.S. money supply since the pandemic's up 30%. Is this like the road at the end, and do we get that reset? Like how do you see that playing out, Keith? Like what's your opinion?
Yeah, so I know, I'll jump around a lot talking about rates. Most people, when they think about rates, think of the Bank of Canada, and that's the overnight interest rate. So the cost of borrowing today and you pay it back tomorrow. When I say rates are going to just surge higher, those are long-term rates. So like 10-year borrowings, 20, 30-year, that's where the risk will come in. And again, the average person may not realize that's happening until after it's happened. And I won't go down that road exactly how it looks and feels and everything. But in terms of like, we go back to the whole turning point. We're using that phrase. We are absolutely at the end of Keynesian economics. So here's the story. Keynesian economics, in Bretton Woods after World War II, all of the allies, they got together in Bretton Woods, New Hampshire. And if you ever get a chance, go to that resort, by the way. It is just, it's just thrilling and peaceful. You got to go there, hang out. It's one of the all-time greatest resorts in the world. And Mount Washington is beyond Killer Mountain. I climbed that guy, and man, it knocked me. I was knackered after that one. But what they decided at the Bretton Woods conference, they're trying to decide, like, how do we reset the economy? How do we do this? Because Europe was in shambles. They couldn't pay back debts and all that stuff. So they decided on basically this economic policy called Keynesian Economics. So John Keynes, he was the British economist, sort of came up with it. And what he said was, governments, central banks can control the economy. And what they do with that, and when the economy slows, they can lower interest rates and governments can spend more. And that will help to provide stimulus and things to get back on track. But he also said, hey, when things get back on track, raise rates again. Here's the big one. Governments have to stop borrowing money. Then you want a surplus. You try to always reconcile your books all the time after each cycle. So governments have never done that. They've always run these enormous deficits, one bigger than the next, and to where we are today. 7 billion turned into 12 billion. On a Friday afternoon. But where the whole Keynesian economic thing has really come to a dead end was back in 2008 and 2009, when all the central banks lowered rates to zero and then negative. Because all of a sudden now that they've hit what they call the lower bound, like there's no more rates left to cut. And the closer they got to zero, it's like flying to the sun. All of a sudden there's, you're at that awkward moment where you can't go any higher. You don't want to go lower and so forth. So there's no way now for these guys to use the economic policy they wanted from back at the Bretton Woods conference, going forward. So that's why I say something is going to change. It's going to break and snap, just as it did back before then. And that was caused by war. I think this one will be caused by a financial or economic war. But we have a new system coming up, and whether it involves, central bank digital assets or crypto or, currency backed by commodities, it's kind of irrelevant, because before you get to that, it's going to get, pretty ugly and exciting at the same time, depending if you recognize, how this is playing out. But in my mind, this is the most single important thing to understand what's happening in markets. No one can take on any more debt without rates staying low forever, and they cannot stay low forever. Otherwise, capitalism just doesn't exist. And I know Rich is a socialist.
Yeah, no, I just want to thank you, Keith, for highlighting. I mean, Keynes gets a really, really bad rap, and Keith, as a markets guy, you nailed it. The bit that they always forget is you need to build up the surplus once you've entered in, once you've come in to quote unquote save the economy. You need to go back to, you need to offset it. You need to build those surpluses, raise interest rates. Keynes was not a guy who just wanted to spend with impunity forever and ever and ever. That's never, I mean, if you read any of his treatises, that is not what he said. So thanks so much for pointing that out. I think he gets a bad rap. But as far as the other bit, let's quote somebody else, Hyman Minsky. And I think that that's maybe the thing that we're all sort of, we're like circling around this larger issue. And the idea that like all stable economies sow the seeds of their own destruction, which is stability breeds instability. You say, Rich, why did that make sense? It's because governments, central banks refuse to allow some minor rate reset along the path, right? Which will inevitably take the punch out of a much more significant, much meaner, much more politically, sketchy reset. And that's, I think, if I may, and in one little mini sentence, that's the issue. I mean, this is why people like you and I, we always push back on low rates forever. This is why we push back on monetary policy being so easy, by governments just spending forever. No one wants to accept the near-term pain. And it breeds the potential for a severe dislocation. However, and as Keith, as you rightly say, who knows how it'll manifest? But that dislocation is coming.
So something to add to that, because again, let's circle back now to the market and the industry. So the way the industry looks at this, they don't say, oh, wow, rates are too low. They're going to spring up higher at some point. We need to protect, our clients' money. Zero chance that that's coming across in their meeting room. Instead, the way they look at it and they say, wow, rates are really low. Clients, they still want a 5-6% yield on their investments with no risk. We can't get that in a regular bond market. What we can, though, is invest in a big basket of riskier bonds. But we're going to, instead of calling them junk bonds, we're going to call them high yield. And they go, yeah, they slap hands. What an awesome name. High yield is better than junk bonds, right? And then they say, hey, why don't we buy, emerging market bonds as well? We'll call that global bonds, global diversification, all that stuff. So unknowingly, Canadian investors, they all have bonds of some sort in their mutual fund or something like that, or pension plan. And because of the end of Kinesian economics, because of this, this turning point that we're looking at coming up, they don't realize that the industry has pushed them square right out in the middle of this, 6-lane highway. And when they look up, they might think they see 2 motorcycles coming towards them. They'll stand in the middle and they'll be okay. And they realize it ain't 2 motorcycles, pal. It's a big Mack truck. It's going to run you over. But the industry, like they're not looking to preserve client investment portfolios in what should be the lowest risk part. Instead, they got them pushed way out into the riskiest part of the portfolio. Because I know, Rich, you keep saying, hey, like risky assets should perform better, and I completely agree as well. And because again, like this, like when this thing pops, it's going to hurt the people who can't afford to be hurt the most, and that's exactly right. That's what the challenge is. It really is.
Sorry, can I just address the risky asset thing? Sorry, just one teeny weeny thing, and I'll be quiet. But which is, when I say that they'll perform better, I mean, they're both, and my premise and what I say to my clients is they're both going to be shit, right? So it's just a relative, at this point, it's a relative game. Sorry, Steve, please.
Yeah, but one more thing about that. Sorry, Steve, but real quickly though, with Rich made a good point, but one part of that, you say, they'll both be shit, but one piece of that will recover. Like equities will recover.
Right.
The other part will have a permanent loss.
Yes, exactly. That's exactly how
permanent. It doesn't, you don't come back for it. And that's
you get a haircut and you never get made whole. That's it.
Absolutely. Whether it's you're getting paid back 65 cents on the dollar or 35 cents on the dollar, it's gone, right? It's gone. Right, Steve?
Yeah, it's what's that South Park episode? And it's gone. Yeah, it's anyways.
What a cheerful Christmas episode, eh, boys?
Yeah, it's like a remake of the global financial crisis. These people go into the bank at South Park and they sit down and they go, "I'd like to deposit $100," and he goes, "And it's gone." Next.
So we have an expression where I grew up, and I say it all the time, and people look at me like, "What the heck is he saying?" But I'll always say, "And there she was, gone."
Yeah. We're always good for at least one boomer joke.
I have another good one. Today's a good day on close.
What?
I don't get it.
It's a good day on close. Some people who are listening, they might know what that means. If others don't, there
will be at least one person who knows.
You have to be at least 75 or older to enjoy that joke.
My mom will know what that one means. Yeah, of course. Okay, give us some Christmas cheer. What's the Christmas cheer you have going?
For me? I had a beautiful day feeding cows. My uncle owns around 60 cows. He's incredible. 75 years old, jumps in the truck, drives out to each paddock every morning. Today we were chainsawing down some olive trees so they don't get too big and too wide. He's
Tom Brady of farming.
He is the Tom Brady of farming. I'm not sure if I'm the Tom Brady of macro, but he's definitely the Tom Brady of farming, and he's incredible. He looked great. That's what my Christmas cheer for everybody is, man. You use it or lose it. I mean, he's incredible. I would put him in the octagon against anybody at 75 years old.
Well, if you're Canadian and you're not the Tom Brady of macro, what do we call you? Like the CFL's Dave Dickinson of macro.
Can I be the Doug?
What's that? What's the Montreal Alouettes quarterback?
I'm going to be the Dora the Explorer macro. How about that? Can I be that?
There you go. Well, I think that's probably a good place to leave it. I think on a lighter note, just to kind of highlight maybe what we were talking about in terms of the sort of the end of the Keynesian economics. There's no clean balance sheets left anymore. One of the probably best examples of that is was on Twitter is you can now finance, no joke, you can finance your Domino's pizza. So you don't have to pay $15 for your large pizza. You can finance it over like 3 months and pay, $2 a month. It's just like, I always find that hilarious, right? Like I always get these get these pamphlets in the mail. It's like, the Brick has this big sale, and it's like, buy your new TV for $800 and finance it over 6 months. I'm like, if you can't afford an $800 TV cash, I don't think you should be buying a TV. But again, you can finance anything now because that's just the financialization that we're in. Everyone's super levered with debt, and you can now, maybe to the enjoyment of many of our listeners, you can now finance your Domino's pizza. So
we call that vendor financing. And so that tells me, and same with these ARC funds that are out there as well, because the way that they're put together and structured, we really are at this point where a lot of markets, they just don't make sense anymore. They don't pass, the smell test. So for those that were around back in 99 and 2000 and stuff, a lot of those tech companies back then, they're selling a lot of stuff, but it's all vendor financing. So they were giving their routers and switches away for effectively free with the assurance they would get paid, 9, 12, 15 months later. So when I saw that, Domino was saying, hey, you can buy a $15 pizza today and pay it back, $2 a week over, 10 weeks or something. It's funny and it's a chuckle, but it also tells me that, oh, wow, this
something's broken.
Tough. Yeah. And then with the whole ARC funds, if people are or are not familiar with them, effectively, it's a very good marketing strategy. It says, we're going to invest in these great technology companies, innovative, they're going to be disruptors and all that stuff. And these companies, they actually are. They are doing this stuff. They're doing incredible stuff. Years from now, we will realize, oh, wow, we were using their products and services. We didn't even know it. However, the way that these funds are providing liquidity when people redeem, is by investing in like the big large cap names, like the Teslas and the Apples and stuff. So when you have to use liquid equities to provide liquidity in your fund for illiquid equities, that creates a whole lot of trouble. And I've seen that firsthand in my previous life. If all of a sudden you get a run on equities and you got to sell all of your liquid equities to meet redemptions, pretty soon that fund, it's just full of a whole bunch of these illiquid securities that they can't be priced attractively. And all of a sudden, that's why you see one of these funds. I think the main one, what is it? ARK-K, I think it is. I think it might be down 40 to 50% from its February high and everything. And it's not to say, remember, we're not giving investment advice, but again, if you make observations that are out there and you start connecting the dots, it's easy to see that, you know what, the markets that we just experienced from June of 2020 up till, let's say, September of this year, that's not a normal market, guys. That was driven by an incredible amount of liquidity gushing into the market and, a one-way street. I think we're sort of on the other side of that there. So, yeah. Be careful with your pizza purchases. By the way, I make really good pizzas. I'm a very good amateur.
By the way, if you want inspo for your Friday night pizza,
Sunday night, I thought.
Well, I don't know, Keith. Follow Keith at IceCap. He posts pictures of him in his sexy apron making pizza. So, and
so you guys know Mike Green? You guys know Mike on Twitter?
Yeah.
Mike's he's Professor Plum, I think. So Mike and I are friends, and Mike started keto diet there a while back. And he sent me this private DM there a few months back. He said, Keith, every time you do these Friday night pizzas and everything, you copy me on it. He said, you have to stop it. It's tempting me to go off this diet, which is important to him and everything. So I'm in Mike's bad book. I'm in his bad book.
You're a bad friend. Speaking of which, I think maybe at some point we'll have to get Mike Green on the show here, but he's a smart guy. So, but I think we'll leave it there for now. Merry Christmas, Happy New Year. Thank you to everyone here who has been subscribing and following along the podcast. Obviously, it's a long journey ahead. We've just begun, and we certainly appreciate the support and the traction that we've garnered so far. Our one maybe holiday wish and ask of you is that, if you've enjoyed this podcast or if you've enjoyed any of these episodes, all we ask is that you share it with at least one friend over the holiday season. Let's get some word of mouth out there and let's continue to grow this community here. So as always, we'll see you in the new year.